It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening, March the 28th, 2016. Cracking open this last full week of the month of March. Feels good to be back after Easter holiday break. Hope you guys had a great break. Sorry I missed you guys last week. Hope we set you up with some good skills to make some profit without me late last week. If you took the week off, hope you had a restful week. Back for another nightly newsletter in store for you guys tonight. We got a end of March going into April 1st. We got non-farms later on this week. Don't forget about April Fool's Day. You know, it's always those people that you least expect it. They're going to be the ones that try to play some trickery on you at the end of the week this week. I promise you guys there'll be no April tomfoolery happening on this blog on April 1st, although I can't guarantee anything, but I'm not usually in the mood for that type of stuff. I'm here to get the sleeves rolled up and get another big week of newsletters out the gate here for you guys. Hope you had a great weekend. Welcome back. Happy Easter out to everybody, and hope everyone's having a great week here so far. Another great newsletter tonight covering crude, S&P, gold, and euro. Crude is bearish with a descending wedge that is currently untested, but we have a rising support trend line between the sellers and their target. So we'll be watching that key area of support for tomorrow. Kind of an interesting scenario tonight on the oil market. I don't think anybody expected to see oil just keep going the way it did in today's session. We'll take a look at that in a second. The E-mini S&P, is range bound with a slight bearish bias this evening, which tells us exactly where the most common traps will be tomorrow and how to avoid them. We have a triangle setting up right now on the S&P. Slight bearish bias, a triangle right in the way here. Got a lot of that tonight. Got a lot of these charts that look good. We've got something in the way, and we're going to see if we can give you guys a plan for tomorrow to navigate around it. Moving on to gold, the yellow metal is bullish after a head fake at the open this morning, but falling resistance will likely cause the buyers to wait until they see proof or enough room to buy this market tomorrow. Gold is a fantastic example tonight of how you got to trade around support and resistance sometimes. And of course, take a look at that in a moment. Euro. Last but not least, how can we forget about the euro? The euro is bullish and rotating back towards the lows of an untested channel, which tells us to look for buying opportunities with bear traps at some key support levels waiting for us tomorrow. We've got a first test setting up right now on the euro. Very exciting stuff. Before we get into our charts, though, tonight, I always want to remind you, the only place to watch the full-length version of this nightly newsletter video is on our trading blog here at sidewaysmarkets.com. You know, if you're watching the video right now on our YouTube channel, that's wonderful. It's only a small snippet of the full-length version. If you want to see the full-length version, go into the description of the YouTube video, and you'll see a link that'll take you over here to our trading blog. While you're here watching on the blog at sidewaysmarkets.com, don't forget to grab a free pass to come out and join me in the trade room as a guest. Don't forget to register in the lower left-hand corner as a member of our newsletter mailing list. Promise no spam. Give me your name and your email address, and I'll shoot you an email every evening when my newsletter is ready to be watched. And of course, below the video, you can download all the charts you see me using in tonight's video. All the charts in tonight's video, you can download those and have them on your computer for your own trading tomorrow. And of course, over on the right-hand side, you can register as a trial member, right, to actually learn more about what it means to be a student here at School of Trade. And you know, we always have someone standing by 24/7, 365 to answer all your important questions. Before we kick off the charts tonight, let's grab a look at the schedule for tomorrow. Tomorrow should be relatively interesting. We get the last few days of the third month of the year. Volatility always gets kicked up. Remember, end of the day, end of the week, end of the month, end of the quarter, right? What happens during these times? At the end of the day, end of the week, end of the month, end of the quarter, end of the year, traders take bigger risks. We also see daylight savings time shift, tax season, spring break season. That means lower volume. Combine bigger risk taking with lower volume, and you get a recipe for some excessive volatility this time of the year. So don't say I didn't warn you. Remember, protect your capital first, right? There is risk out there. It's real, right? And a lot of times you can't practice low volume environments on a simulated trade account. Remember, it's just like trading news. If the volume is really low, you'll have no problem practicing on a simulator, but once you move to that live account, all of a sudden entries are slippery, stops are slippery, right? So, you know, we talk about this all day, obviously, in our trading course, right, in our trade room. We'll talk more about that to our students, but be aware, this time of the year, low volume, because the weather's changing outside, right? People are going away on vacation. We just came back from vacation as well, right? Low volume combined with bigger risks people take this time of the year because of the end of the quarter, right? End of the first quarter. So be aware of that. We also tomorrow have Janet Yellen. Now, this is one of those scenarios where not every single time that she speaks, but most of the time. Tomorrow morning at 11:30, Janet Yellen will take the microphone at the Economic Club of New York. Oh, ta-ta, right? Sounds pretty important. It is going to be an important speech tomorrow. Now, like she always does, I should say, right? I don't want to put my foot in my mouth here, but like she always does, she does a pretty good job at kind of dancing around some of the important questions that all the analysts are going to be looking for. But you know that traders will be sitting on hands trying to pick apart everything that she says tomorrow at 11:30 a.m. Eastern time. So the good news is this. She did us a favor by not putting it right at 10 o'clock like she usually does. So you know me, I always tell people, get into the markets early. You're more than welcome to hold positions over lunch into the afternoon, but the most reliable trades always come in that overlap between the London afternoon session, right, and the U.S. morning session between 7 a.m. and 11 a.m. Eastern Standard Time. The volume's the best. There's professionals in the market. There's a purpose to the price action. So I don't think that's going to affect us too much, but I would expect, though, if you're trying to trade after 11 o'clock tomorrow morning, you're going to run right into Janet Yellen, right? You'll get yellified, right, tomorrow morning. I may never use that word again. I apologize about that. But the reality is we would expect to see volume drop here ahead of Janet Yellen. What it is not, though, is it's not her multi-day, semi-annual testimony, which will have us sitting on hands the entire morning tomorrow. So I do expect to slow down ahead of Janet Yellen speaking. Again, it's not her testimony on Capitol Hill, which happens twice a year, right? And that really slows everything down. This is just your average kind of speaking event. And thank goodness it's after we will be finishing up with the most reliable trading, so 11:30 tomorrow morning. Other than that, though, we get a couple minor news reports. We get the Case-Shiller at 9 o'clock, consumer confidence at 10 a.m. tomorrow morning. As you can see, just a slew of Fed speakers tomorrow. Yellen, Kaplan, right? They're all going to be talking about inflation and GDP and interest rates and everything else that goes along with the job title of being a Fed speaker. So a lot of Fed speak tomorrow. News headlines will definitely be reacting to that. We will be trading the chart tomorrow morning. We don't trade the news because news is noise. Now you know exactly what to expect tomorrow morning. Let's not delay any further, though. Let's go into this chart sheet tonight. You get the schedule for tomorrow. You know about low volume and high volatility this time of the year. Let's kick it off here with crude. We're going to go crude, S&P, gold, and of course we can't forget about our friend the euro. Interesting scenario here right now on crude. I don't think they thought it was going to keep going today. It was very, very slow this morning on crude. The S&P didn't even blink until noontime. Euro and gold look pretty good, though. So a lot of scenarios tonight we're looking at something in the way. And today's going to be a good example, a good learning environment tonight on how to learn about how to trade around some areas of support and resistance, right? We don't sell into support. We don't buy into resistance, right? And then depending on what the directional bias is, that tells us where to go from there. So crude oil, bearish with a hiccups. We get a descending wedge that is untested, but we have a rising support trend line between the sellers and their target. We'll be watching this key area of support below us tomorrow. We have a head fake at the open, a bearish wedge, and a rising support trend line on the chart this evening. First of all, the head fake at the open tells us this market will most likely try for a second leg down, and we have a measured move waiting for a target. Here's your head fake at the open. And you see this a couple times here. It probably was because of low volume, coming out of the Easter weekend. And, of course, it was a holiday in Europe today as well. So head fake at the open, right? Jump up, collapse back down. We call that a rotational environment. And that typically means to look for a second attempt to take it lower, because usually what it'll do is it will surprise people. Now, as you can see here, this is a general guess right now as far as the measured move, but wherever we end up, if we end up coming back down here, we'll be looking for a measured move here. It's difficult for me to tell you ahead of time where it's going to be. As it stands right now, though, that measured move will be down around 38.16. I don't think it's going to sit like that for too much longer the way it looks right now, but obviously we shall see. So be aware that head fake at the open is called the rotational environment, and this tells us we're probably going to get there's probably going to be some sellers that didn't even get a chance to grab this move down, or maybe they didn't trust it, and they'll definitely be interested if they get another shot, right, to finish off the move. The second thing is the bearish wedge. The bearish wedge really is the most important clue we see right now. The bear wedge tells us that short-term correction was expected, and the sellers will try to retest the low at 38.87 before trying to test the finishing point of the wedge, which is also beautiful, right at the previous low of day at 38.34. If you look left here, you'll notice the previous low of day there, right? It's a little bit below. I want to say the previous low of day was at 38.33. That's also last week's low. There is a big target on 38.34, 38.33. 38.33 is yesterday's low. It's also the prior week low. If this thing gets a little bit rambunctious tomorrow, that's where they're going to be hunting for. It's a little bit difficult to tell where the tip of that wedge is, but this is what you want to remember about a trading wedge. When we have a wedge, what typically is going to happen is you're going to see, and again, this morning here, sellers taking it lower, right? It breaks up, and then it finds a way of getting back to kind of the final resting point here, right down to the point of that wedge. All right, and then obviously we're going to use some of these swing levels here to look for traps to sell it back down to the lows. The bottom line is you can see the wedge here. It's pretty easy to see, right? There's your wedge. There's always a little bit of discrepancy to where that wedge point is going to be marked up, and we know that 38.34, that's where we're definitely going to be looking for it, right, to finish off that move. 38.34, 38.33 is the prior day low. It's also the prior week low. There's a big old bullseye for the sellers, right, down at 38.33. On top of that, we draw a double down, right, off the first two swings of the session. Double down support at 38.46. Right, that'll be another one. And then, of course, we talked about that measured move target, right, waiting for us below. If we do end up going lower, first target's going to be 38.87, right? That's the first objective. That is ultimately the seller's objective, is to get back to 38.87. And then, of course, 38.33, 38.34, right? That'll be the runaway target for you bears tomorrow. Now we have the challenge, the rising support channel, right? This rising support channel, which, honest to goodness, it looks a lot like a bull spiking channel in the short term, doesn't it? Right? This really doesn't mean much. We definitely know we have a rising support trend line, right? Call it a channel, call it a trend line. I'm going to call it a rising support channel, and that means our biggest obstacle is going to be right around the low of that channel. And this is going to be one of 4 different markets tonight that really have this kind of situation where we have a good idea of where we're going tomorrow. Very low volume today across the board, which really kind of puts a variable in it for tomorrow. The bottom line is, all we can really do as professionals is trade the chart, right? We can't overthink this. Trade the chart, and then tomorrow we'll see reaction to what we're seeing tonight, and we'll be able to put that into real time and apply what we know for tomorrow. So the rising support channel is the obstacle for the sellers and will most likely be the biggest variable for direction tomorrow. Aggressive sellers will be looking to sell at the highs of this channel, while more conservative sellers will wait for more proof after the break of the channel lows. Buyers will be looking for opportunities at the channel lows as well and be watching for the sellers to fail for a move back up to the high. Let's play that game. What if price goes higher? What if price goes lower? Now, as price goes higher, it's going to be running into these, what we'll call kind of trap areas here at the high of this channel, 39.65 to 39.50. That area right here is going to be an easy area for the aggressive sellers. Price goes up, buyers try to buy the pullback, right? Sellers are selling into their stops. Remember how it goes, right? Failure into strength, into continuations, back down to that low. Failure into strength, into continuation or pullbacks, right? Back down to that level of support. So as we go back up into this area overhead, if you're a seller, you're looking for buyer failure into strength, into a continuation. The only trouble is we don't want to sell into that rising support. So wherever you get short, if you get short, up at the highs of the channel and up in this kind of trap area up top here, you just want to make sure you budget your amount of room for the target you're going to need. And of course, we'll teach you guys how to do that and we'll do it.